All right, welcome everybody. This is a co-stream between Brian White at Future Asset. We got Nick Gibbs for Investing Against the Grain, and we got Brian Wang joining us. It's also on his YouTube channel. We're going to talk about the stock. Should we be panicking at this point? You've got the stock basically, falling significantly in the last 5 days. It's 274 right now, and it started off around. I guess at one point it was at the $300 mark. And in the last month, it's fallen from 378 to 274. I guess the question people are asking is this, what's going on with the stock? Many had said that there was going to be this resistance at 300. There's going to be a resistance at 273, and it can keep falling further down. So let's start off with that. Should we be panicking? Who wants to get started here first?
I'll,
Maybe Brian
I'll
Wang,
go.
you had some, you want to go?
I'll
You go
go
ahead.
first real quick. It's just, panicking is something you do if you're a short-term investor. If you're a long-term investor, you look at the fundamentals. The fundamentals are unchanged. Guys, sales are collapsing in Germany because of sentiment. Is it because of sentiment? Because what if sentiment was at an all-time high? What if everybody in the world just loved the company, loved Elon more than ever before? We weren't selling junipers. You can't sell a car that you haven't finished building yet. The changeover is taking place. That's going to affect it. Are we going to see a bad quarter? Oh, yes. Yes, we are. That's what happens when you're retooling. Will that sales slump continue once the factories are fully ramped? Less clear. Too soon to say. The story is not done.
Mm-hmm.
So I'm willing to
Awesome.
go more bold than that, but taking off what Brian White was saying about the bad quarter being expected. Basically, we're talking about April 2nd. We're going to get a low number, 350,000, 400,000, down from 480,000 in terms of the unit volume on cars, right? So everyone knows that's happening, right? And you can track it along with weekly numbers from China, those kind of things. So everyone knows that, and people have ignored, hey, FSD is out in China. That could have revenue impacts. There's a possibility of interest rate deductibility on US made cars. That could have impact. So there's a bunch of good news that's being ignored because of that big thing that Brian White talked about, which everyone's talking about, is, hey, Q1's numbers aren't going to be so good. And also there's peak hate around Elon with Doge, brand things, all those stories, right? My theory is that come April 2nd, on the day, maybe a bit before, worst case, like a day or so after, that if you were like on the other side of it, we're going up, and we're heading to some peak news, great news we're expecting in a few weeks. You would trade up to that point, and then you sell on the news. So I'm saying that on the way down, that you have pressure until that point, and then the positive negative story kind of flips because they have no more ammo, right? It's like, okay, you had the bad number, it's there, and then you can say, well, they're going to wait until that shows in bad earnings 3 weeks later, but then the um, the risk of it being surprising at the upside because the expectation will be so low. Hey, you did this, and so we're going to expect EPS to be 30 cents or 50 cents or whatever, right? So when that happens, if you know, they would have to say that it would totally bottom fall out. They would need more news to keep firing at it to keep dropping it. So, and then one last point I would make is that if we look at 2019 to 2020, in 2019, we were at like $15 late in the year. And then we went up to $60 on, I think, February 21st on 2020, right? So you did a 4X move, kind of like our big move this time, before the election, 200 going up to 488. And then we went down. How far did we go down in 2020? 1 month later, we went down to 28. So we were like less than half. It'd be like going from 488 to like 230 or 220. And then V-shape thing, we go up to 275, right? We did the 10X move. So that, for people who weren't in the stock then, that was the big move in 2020. And that was based off of Model 3 getting fully going, China going, Model Y happening in China. That was all that 2020 period. And then now we got new car coming, the Model Y ramped, FSD, robo taxi. I would argue even Tesla bots, even more good news is ready to be totally unleashed over this remainder of this year. So I view that we're basically at, March 10th of 2020 versus, March 5th of 2025.
You're very you're
I'm
very
very-
optimistic.
I'm very
Yeah.
optimistic. I'm going out there.
You're basically saying that you think that by first week of April, April 2nd, that it should actually just turn around, which is really odd. I don't know if I can believe that, because April 20th would be when we actually do the earnings call. It's expected to be bad. It's going to be a lot of it built in, but to say that it will actually hold the floor at April 2nd and start the stock going back up again prior to April 20th, that's I don't follow that logic.
So in the alternative case of a delay, but like where we pop up to 3:30, and then bad news is on the call, and despite whatever optimism that Elon might have about what he sees going forward, because he sees the same things we do, that you would then retest. If we weren't already at 250, we would test a slightly lower number than wherever we're at before. So you could drop down to, from 260s down to 250, or 250 instead of 250 down to 230, 220. But I think then the bulk of this move down happens, and then we would come off the base of the this massive channel down to going up. So technically, other things that I just have the confidence that the turn does happen, with maybe one more leg down before the turn up.
The only way I can see that happening is if we hear the Model Y, because the reason I believe that the stock has fallen is because of a poor Q1. That does not give it a floor expectation of pure Q1, and then all these other things combined. But the misinformation about this volume of sales cratering across the world, Europe and China, they'll even say in China, it's because of the Model Y transition. So as soon as we start hearing Model Y numbers, it's actually improved. It could be that we don't hear that in April, but if we did start hearing that in April, I think that could then change the narrative again to, okay, this is not a disaster. Otherwise, we know it's not a disaster, but the narrative that's out there is that Tesla cars nobody wants to buy cars anymore. See what's happening to their numbers? That's what's happening. And so we need to see Model Y numbers recover.
So we see that the last week China registration weekly was 12,400, right?
Yeah.
And same week, 2024, it was 12,500, right? So saying that China Model Y is pretty much ramped, backed up, is not a case. We'd see in March, do we do 13,000, 15,000 registrations? Do we get the production and deliveries? Because production and deliveries for February was 30,000. That was, year to date, we're down like 40K. Versus where we were in terms of like both production, domestic and exports in China, right? So down 40,000. So that goes to, is Y ramped? I'm saying based on that data point, we could be very, very close to being fully ramped. And that if the numbers like next week, 15,000, 17,000, that would confirm that.
So one thing to look at, and people are saying, well, why aren't we just comparing Model 3 sales? And one answer is it's not available in all markets, but it is available in China. We can see it from the CPCA report. And we can see that Model 3 sales were way up from last year. They're having their best months ever. And that's because those are in production. Those are available. And some people who might have wanted a 3 or a Y, I'm not sure, you know what, I'm getting the 3 because it's available. It's what I can get. Again, you can't sell something that you're not making. If we were in a cola war between Coke and Pepsi, not the individual colas, but the entire brands, and Coca-Cola took down their Coca-Cola lines in every market for a month, yes, for that quarter, things would look like it was over. It was the end of the road. Guys, it's their main product. Model Y is their Coca-Cola of Tesla. So yeah, it's just... looking at snapshots can give a dishonest picture, and I'm dealing with it in the comments every day.
Nick, you have to say something, I think.
Just Glenn, let me offer a different point of view.
Uh-oh.
I know we're very nuanced when it comes to Tesla, and we want to talk about Elon and the Model Y and the downgrades and all that. And don't get me wrong, obviously the day-to-day in any stock and anything about the CEO or change over in their main their main money maker, all that's always going to have an effect. But if you zoom out, the way I look at it is, what does United Airlines, Palantir, Meta, Costco, Coin, AppLovin, Tesla, what do they all have in common? I'll tell you what, it's their stock, their stock charts. And the reason I say that is because the whole market's been selling off since essentially December 18th. All right, this the way the market's been going. And there's, I think, a lot more going on to this. There's a lot of de-risking because of the unknown, whether it's tariffs, whether it's Ukraine drama, whether it's politics drama, no matter what it is, there's uncertainty. And the market hates uncertainty. We know that. I'm tangentially aligned with what Brian is saying. I put a whole post about it yesterday saying that this week is the end of this, what I consider a healthy pullback. Yeah, I know some people are like, oh, Tesla's down 50%. Welcome to Tesla. That's a healthy pullback for Tesla. But the market in general, the S&P or the Nasdaq's what, 3%, 4 or 5% away from all-time highs. Like, everyone needs to relax. This isn't, the world isn't ending tomorrow. The market's pulling back. But a lot of the unknowns are slowly becoming known. All right, where you kind of have a tangential understanding of what's going to happen with tariffs. We know, it's funny you say April 2nd, that's supposedly when the reciprocal tariffs are going to come on. Okay, by that time, even I would say now, the market prices these things in as soon as it knows them pretty well. The market's pretty efficient in that manner. I'm not exactly a market efficiency person, but the market's pretty efficient. And so I would say that Brian's tangentially right with his time frame, because that's going to be the same. Look, for the first time ever, we see analysts revising downward ahead of potential lower vehicle deliveries. They never do that. We always get into the last week and we sit there and say, what do they, sleep at the wheel? How don't they know what's going on? Sure enough, we've seen downgrades all of a sudden happening. That's interesting. So the market's pricing all this in. By the time we get into April, people know that deliveries will be lower. We know what to expect for the earnings call. And then what? Well, then what is optimistic Elon, new vehicles coming out, maybe the market finally, and this is how you know it's not a Tesla thing, it's the whole market thing, because Tesla went down on the back of FSD in China, robotaxi permits in California. All this should have been very bullish news. Record changeover in Model Y, all that should have been very bullish news for the stock, but it didn't. Why? Because macro had a heavier weight on the entire economy. And so to me, the more that we, I don't want to say de-risk, but the more that the unknowns become known, the more the market likes that. It's why the market likes to buy the government, is because it's stagnant. And so I think that's what we're going through. This has been the first time in a long time that we've had a lot of uncertainty. And we've got volatility getting injected into the market. And guess what? Volatility, it seems like it's a negative word for a lot of people, but volatility is good. That volatility, Tesla stock doesn't go up either. So just keep that in mind as well. But
what do you think about what Matt Smith would say? So Matt Smith was, we asked them that question. And he said, yes, the market is down. But even if you give Tesla a beta of 2, it still is way more down than what you would expect because of the answer of the market is down.
I'm not one who believes in just betas and I don't think there's a mathematical recipe to markets. I think the market, if there was, you would have the perfect answer for trading, whether it's Fibonacci's, whether it's fundamentals, whether it's technicals, whether it's, I mean, you'd have your formula. There's not some magic thing. It's like beta, it's a finger in the air. It's that's something that's interesting. Same with Fibonacci trends. I mean, it doesn't mean anything. Right now, what you're seeing is people are risking off. That's what you're seeing.
I have a theory about that. So besides the beta in the market, is that if Tesla doesn't have a strong direction, right? Where, okay, we're have a bunch of profit, we're going to the moon, that kind of thing. You can see also with NVIDIA too, where they have all but good news and they can still take massive dropping in half.
Throw NVIDIA into those companies I was mentioning.
Yeah.
They're another one.
And
Chart looks the same.
then the other thing would be that when you have these high, technology, things where things are not quite as solid as an earnings growth, where that's all there is to it, then there's a bit of a narrative to the story, narrative to NVIDIA, narrative to Tesla. And so then I'm a market maker, or I'm, a big fund. I can enhance the swing to the up. I can enhance the swing to the down.
Yeah.
And so then I can buy and sell, sell at the top, go there, because I'm driving, a cabal of these guys are driving the stock up and down, right? So basically we're going sideways. We're going to go, 500, 300, 500, 300. If there was like no news for like 5 years, it would be constantly going 500, 300, 500, 300, 500, 300. Because they say, I want to, take money from the rubes, right? And then just, do this thing, because it's their money printer to do that action, right? So swing traders, the market, they would just, collect from that near-term movement, which is why you have the long-term, it's a weighing machine, but in the near term, it's the sentiment and stuff. And where a lot of less experienced traders or short-term traders either getting played or you figure out how to try and hop on this swing. But because there's also other sophisticated traders knowing here's how I'm doing the swing, I'm expecting to hit this number, 250.55. They also can see the chart and say that you're expecting us to do that. We're not going to do that. We'll stop it above, we'll stop it below, and then again, someone's money is being taken, right? And also options and that kind of stuff, right? So there's that kind of like short-term taking your money, just guys can move it around, and then you can't. Is I think part of that scenario. I have so a bigger thing. If we have more on the stock, we can do that. But have a new theory that I think that which Chinese company is the one that will get FSD licensing.
Yeah.
And my theory is Xiaomi. Xiaomi is going to be the one. People don't know Xiaomi. They are the largest smartphone maker in China. So that means they beat out a lot of competition. Huawei, a bunch of other, really big, really powerful companies that do it. They sell like 168 million phones globally. They got 13% of the market. They are really the Apple of China. And then last year, they got their Model 3 competitive car, sold about 135,000 of those. And now they're going to do a Model Y competitive car, SU7, or whatever the name of it is, or YU7.
Ultra?
Oh, is that what the name of it is? Okay.
I think that might be the sports car, but go ahead.
No, it's XU7.
Right. XU7. Okay. So they could have 300 to 350,000 sales this year. They're targeting 300,000. I think Morgan Stanley thinks that they'll do like 350,000. And they could even exceed that to 400,000. I think they're a stronger competitor than actually BYD, even though BYD sells more cars. And the head CEO of that, Leijun, Leijun, is really the Steve Jobs, almost Elon Musk of China, because he was able to win the smartphone market. It's as if Apple actually succeeded in releasing an EV, right? Apple wanted to do that. They dumped $10 billion into it and could not. This Apple of China has done that. They've gone to a car, successfully released it, growing fast. Their stock tripled. So because they have a really in-class kind of Model 3 and soon Model Y, then that if they haven't already, that CEO and his team can get the camera positions right, easy peasy, right? They would have the camera positions right for the version of their Model 3 and Model Y. So they could then be a super fast adopter of FSD. And the CEO has talked very positively about Elon. I was at a Chinese American, Asian American business meeting where on the panel, VCs and other people who had met Lejeune say that he is hardcore tech guy, marketing genius type guy. He is not because he wouldn't, like when he was going to go into the car market, he personally tested every electric car in China and the US, I think also in Europe too, right? So he does his homework. He, just like in order to make your Android iPhone knockoff and beat 1,000 other knockoff guys, right? So I think he is the one who's gonna do the licensing, and he'd be a great partner because 350,000 cars this year, he will have 1 million cars next year, right? So Elon said he want to have 1 million cars. So yeah.
I wanted to say one thing about stocks before we move off of it. I had an opportunity to spend a couple days with a gentleman who is a coder. He is a programmer who works at a fund that does high frequency trading. And he said, you can absolutely predict the market, but only for a few seconds. And as soon as you're able to accurately predict the market, it doesn't work. And the reason for that is as soon as you jump on it, you change the equation and everything that you do ripples out from there. And if you think you've got some brilliant idea that's going to make you able to beat the market, the equations that these people are using to get a 0.1% advantage over the market look like a foreign language. It looks like alien handwriting is what it looks like. And it is, these are teams of geniuses who are trying to not get 20x, 30x. They're trying to get 1.01x. And that is enough to make it work when you're talking about enough dollars. It's very difficult to do. On the Xiaomi front, my only concern with them is that they are losing a bunch of money per car. We know that. The price that they are selling them at is fantastic. It is one heck of a car. But part of their losses is being hidden because they are being made with a Chinese state manufacturer. And they do have their own manufacturing license that's separate from them, but it is still them making it. So there could be additional losses being hidden on the back end. That makes it difficult to scale. I'm surprised they've scaled as aggressively as they have. I didn't think they had this kind of money to pour in early on to lose that much, to move that many units. But they are getting to economies of scale. They are getting to the kind of production they need to justify the low prices that they currently have. And for a first generation car, that Xiaomi is one heck of a beast. Anyone who is sleeping on the notion that China is going to be the world leader in EVs and really in automotive, because the future of automotive is EVs, is missing the boat.
Yeah, and Xiaomi, they're one of the first that did move to neural nets and dump lidar. That does make sense, Brian.
And being a phone company means they know hardware software integration. They know how to write their own code and make it work on the vehicles that they're building in ways that Volkswagen has found impossible with their Cariad team of 10,000 monkeys at 10,000 typewriters. I'm pretty sure was their strategy. But it is painful to watch and seeing that Xiaomi, while not perfect, it's not the perfect car, but for a first effort, my gosh, is it close?
And they have about like 140 to 200 test cars, may have increased or something like that, and about 500 to 600 engineers. They've done about $500 million into it. So they've made a good ADAS off of that. But for them to do what Tesla has done for FSD, as good as they may be, even if they got state funded data center and all that kind of stuff, it would take them like to next year to get to 1 million cars, to have 1 million cars gathering data. And then it would then take another 4 years. So it would be a 5-year thing, even if they executed perfectly to do it. And then if they do the deal with Tesla, then, and they use that to smack down BYD, and they get to 5 million cars in China, 7 million cars in China,
Yeah.
then they're perfectly happy, right? They did a 10x or something like that, and they're great. They're doing stuff in China. Tesla's happy. They're making FSD sales off of a major seller. They weren't going to be allowed to get to, 40, 50% or whatever the China market anyway, right? But if I do it with a partner, they get the FSD money, and then these guys get their car money. So they're fine. So it's a win-win for both to do it.
Mm-hmm.
Yeah.
I was talking to Hans today about, with China allowing Tesla to have full self-driving being used there must have been, or very likely have been, a quid pro quo where China says, okay, we'll let you do it, but you got to give us something. One of the things could be that you partner with a Chinese company to give them FSD or some sort of partnership. What do you guys think of that idea?
Yeah, I think that's automatic. Yeah.
Seems reasonable.
I don't.
Mhm.
I
Let's
don't
hear
think
it.
there's any quid pro quo. I think they're projecting what, a 5% GDP this year. China can't afford to have Tesla move into India and leave China. Like, they don't want to see that. They're seeing that with Apple. You're seeing a lot of companies. Don't shake your head yet.
But they're
Brian.
not leaving. But they're not leaving China. They're entering a
They
market that
could.
they wouldn't. This would be for the Indian domestic market. India has very steep imports. It's not like if they built another factory in China, they could export the cars to India in a way that would be cost effective and actually work. They
No,
have
but you
to
could build in India and export out of India.
Yeah,
But then,
yeah.
but then you
China
wouldn't be able
doesn't
to.
want that.
I know, but
China
you wouldn't be
is
able to export into
struggling.
China then. China's got the
That's
25 million,
fine.
30
They
million
wouldn't
dollar
have
cars.
to. They could just
Right.
build
No.
in China, sell in China.
Right. Nick is talking about exporting to
For the Asian
Oceania,
market.
and Australia and all that. I think what you'd see from India in terms of exports is right-hand drive. I think they would begin serving all the right-hand drive markets, but only if the cars they're building are the kinds of cars they wish to export in the first place.
But my point is it's not make that argument. My point is that China, I think, is more on the defensive when it comes to this. They are seeing a lot of companies trying to de-risk. After COVID, a lot of companies saw China as a single point of failure. They don't want that anymore. And they're still dealing with a real estate problem over there, even though it's not headline news anymore. It's something I track just because for some reason I find it fascinating. But there's still a lot of problems over there, and they're slowing in growth. And they are also trying to manage this, becoming a little more open, a little more capitalistic. They also want to attract more companies in there. And if you prevent Tesla from having FSD and every earnings call, Elon's on there, I mean, it just starts to have a bigger ripple effect. And I also think that China sees Tesla being there as that iron sharpens iron, right? It forces the other companies to push the boundaries. And not to sound nefarious, but if Tesla is running FSD there locally, then maybe they can somehow get a copy of FSD and figure it out.
Yeah.
And I don't believe that that's how the software works. I know that every company has their own secret sauce, and if I could see the way an algorithm works at Google, that doesn't mean I could make it work in my own way. I don't think you can just steal FSD without a live connection to the mothership. But I could be wrong.
You could distill the weights. If you had actual copy of the software and you had the ability to install the package yourself, it's possible. I mean, I don't know what Tesla has in there as preventive maintenance or preventative measures, but
Also
would never ever
worth
underestimate
pointing
China
out that
when it
China
comes to-
does protect IP for international companies.
I'm just saying, if there's one,
You can laugh if you want, but they do. That's
there's
why
one-
we
if
haven't
I-
seen the same kind of
Yeah.
rampant
if there's
theft
one
we-
group
we
of
did
people I would
20
never
years ago.
underestimate, it's the Chinese. If they
So
want
this
to
is-
do something, they will do it.
This is just came out today, right? This is BYD's executive vice president, Stella Lee, and she made some comments. The first thing she said was China's willing to share key technologies in EVs and autonomous driving with foreign companies despite trade tensions. So, they're positioning themselves as, the US is going to stop China from building cars into the US, and you can't import your software into the US. And she's saying, hey, China is allowing foreign companies to come in and we're willing to share EVs. She did also clarify that they're not planning to build a factory in Mexico. At this point, they don't know what's going to happen yet. And she said this, right? We're pledging to work with rival Tesla to combat petrol cars. Our common enemy is internal combustion engine. We need to work together. So some, I don't know, some way to say, hey, we want to partner with Tesla, but it's we have the same enemy.
Yeah, I like the idea of another company besides BYD being one that would license FSD. I'm I'm kind of getting more and more to the camp that there isn't going to be a licensing deal. I don't know why. It just seems more and more that Elon wants to kind of, or not Elon, but Tesla might just not see the benefits. I don't know. I don't have a full thought on it, but I've just heard some points of views that I'm like, oh, that's interesting. So I'm kind of neutral on it, but I do think that if anyone, it would be either a Chinese company or Ford. I thought it was interesting that Farley said that the new vehicles won't have any L3 or whatever. I'm like, okay, well, does that mean because it's gonna be robotaxi? So it's gonna be L4, L5. Are you essentially saying it without saying it? But yeah, guys, I gotta go. I have another call. I have
Yeah.
to get to another meeting. But
Right.
it's great to
We
be with all
appreciate you,
of
Nick.
you.
Yeah,
And
thank you.
I
I
hope
will
this
take
keeps running when I leave.
and I will take a moment to point out to everyone else that this live stream is going out on all 4 channels, on Nick's Investing Against the Grain, on Brian Wang's Next Big Future, and on Herbert's Brighter, as well as here on Futuraza, where I am. But all of us are here on our channels. And after the show, at least from Herbert's and my show, it automatically will redirect to the after party where I actually address some of the comments and chats. It's a lot of fun, and that means, of course, that at 11:55 I cut out. But Brian, because you don't know necessarily, that doesn't mean we have to end sharp at 12 if it goes over. I just hang out and listen so that I pick up when the show ends.
Great. So on a couple of Nick's points, one would be the alternative companies that I think are the top candidates for licensing. I still think licensing happens. Ford already mentioned, my Xiaomi prediction, maybe BYD, and then Geely there. But I would think wouldn't be all 3 of the Chinese makers. I think probably be like 2 of them. And then outside of them would be Hyundai/Kia. Hyundai Kia has a significant volume of EVs globally, and that I think is a comparable thing to make sufficient numbers of cars to make it interesting for Tesla. And then for China and macro, I follow that closely into the real estate and other stuff. I believe that the real estate issues in China are related to the fact that their demographics are collapsing. Basically, they dropped down to like 8 million births per year, down from like 20 million, like 10, 12, 15 years ago. And that is a huge problem. Also, the aging out of their population. So because of the one-child policy and that kind of stuff, that they're already at, I think, average age of about 40 for the population. And that's going to shift up pretty fast to like 50 by about 1945. So the problem with that is that you have you spend money during your lifetime, right? So you buy your first home, you buy your car, and then you're replacing it, right? But you kind of like have peak spending around 40. So when you get to 50 and stuff, then you're saving money. You're saving money for retirement. So the consumer thing shifts, and that is a big problem for houses and for others, because basically everyone thinks, okay, the economy is growing, the economy is always going to grow, kind of thing. In Japan, it didn't happen. Like in the 90s, they hit their demographic thing, and then their real estate dropped in more than half. Like it used to be that Tokyo real estate was the most expensive in the world. You can buy on the outskirts of Tokyo for like $100,000 in a big house. They're actually destroying homes in Japan because the people age out and then no one can go into that property, right? So basically they then start destroying them. So then China's got the same thing. They're going to catch up to Japan on that in the next 10 years. And so there's basically demographically, until they start increasing the number of babies they have, and there's, going to that basically there's that demographic headwind is not something they can do anything about. And it's not unreasonable to expect that they're already losing from 1.4 million, 2 million, 4 million over the next year. They'll be dropping like 10 million a year, right? And not just the fact that they're overall not there, is that because the ones that are there are old, right? So that's a problem they have. But I have my belief is that bigger, and that is a huge thing. And I've written a bunch of articles about that. Even bigger than that, is I believe that AI is going super intelligent like next year, right? That basically the spending on AI, people say, is it a bubble? I'm saying no, it's not a bubble. And it goes to the fact that the big tech companies, Amazon, Tesla and XA in there too, right? Amazon, Microsoft, Meta, Google, they spent $250 billion last year on AI and cloud and infrastructure and that kind of stuff. They spent $350 billion this year, right? Last year, 2024, they still had $350 billion of free cash flow. Despite $250 billion in R&D and CapEx, they had $350 billion of like money made in that year, the extra cash made in that year. Not even talking about stockpiles of cash reserves, like, like $400 billion or whatever like that, right? Just like money printing that they're doing right there. So then Brad Gerstner and Bill Gurley on the BG2 podcast, in discussion with Dylan Patel, Semi-Analysis, says they will go to all free cash flow. All free cash flow means that the 250 plus the 350 or 350 plus 350 goes to like $700 billion. If not this year, like next year or something like that. And then with the 15% growth, you'll be at $1 trillion plus in AI spending by 2028. But then people say, well, they're not making money on AI. They're not making money on AI. There's a lag in terms of like when they make the money, right? Nadal, CEO of Microsoft, said 2024, they made $13 billion of AI business, just segmenting out, we account for the AI business. And it was growing at 175% per year from 2023 to 2024. So that means the investment made in 2022 or something, 2023 in AI cashed out at $13 billion. So over 3 years, it's probably positive. And it's close enough to be positive, it's good enough. And if it's growing at nearly 3 times a year, then it will justify I have to keep betting on it. And the specific of that is something called Pascal's wager. So they talk about Pascal's AI wager. So Pascal's wager, Pascal, a mathematician, 100 years ago, he talked about if you believe in God or don't believe in God, that you need to go positive on believing God just in case. Because, if you're right, then you go to heaven. If there's no heaven, then it won't matter. It's still fine. Applied to AI, belief in the AI God means that all these big tech companies got to dump their money into it, because if they don't and it works, then they've lost totally. If it doesn't work, then their spending might not have been that good. They're going to spend $200 billion in a normal year on stuff like metaverse or whatever else they're going to spend it on. And then this would still kind of pay off. I can do some kind of like AI cloud thing. It's not like my investment goes to zero, right? So thus and then if they miss it, the CEO gets fired in 3 years because, hey, you blew it, you missed it, the company's dead, blah, 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 you get fired, versus I have this massive money printer, like Zuckerberg spent, $50 billion, $100 billion in metaverse and got nothing out of it, relatively speaking, for 5 years. It doesn't hurt him at all. The stock's still fine. So that's my analysis of how this near-term AI boom, not a bubble, keep happening. The spending will continue. A deduction out of that would be NVIDIA goes to 400, so a non-Tesla stock analysis thing.
I did want to step
market. Yeah,
I did want to step back a bit and talk about China's demographics real quick, because there's a very human thing that people do, which is assume that the way things work for them, for their life, for their family and country and neighborhood and all that is how it works everywhere. In the 80s, there was the big fear Japan's going to take over everything. And now we see that just based on demographics alone, that wasn't really possible. Japan is a shrinking country. They have a negative birth rate. They are below replacement. They do not have the population that they once had, and they don't do immigration. And in China, if you're about my age, you don't have brothers and sisters, which means if you're in the generation after mine, you don't have cousins, which means at holidays, it's you and your parents and maybe your grandparents. And that's what a family looks like. It's a very different kind of country where there is no cousins. And that's going to make for interesting times over the next 10, 20 years. When I was there 20, 25 years ago, I was noticing this trend already, that the baby boom crunch that we were staring down the barrel of in the US, with more boomers retiring than new workers entering the workforce, was going to be that, but on steroids in China because of their very low birth rates. And now we're at a point where they can have more kids. You can if you want, but the world has kind of moved on from that. It's not what their society values. It's kids are expensive. Kids are a lot of work, and it's easier to have one or no kids than a whole bunch of them. So it's going to make for some very interesting times in China over the next 10 to 20 years.
Yeah. So, okay. So that, I think, wrap it all together, right? That's what makes sense. China is not in a position at this point to, stop foreign investment. In fact, that's what we've been hearing them say. We need more foreign investment. We need Tesla here. We need these new technologies. We need to build out our infrastructure. So that's number one. And then the AI boom. Totally agree with you, Brian. This is just the beginning. Companies are spending it. And so how does that all relate back to Tesla? Well, Tesla is in a good position, right? Tesla is the only company today. Well, I mean, let's not say the only, but one of the best companies today to take advantage of real world AI, actually turning it into real world money, right? Actual real cash. We're talking autonomy. We're talking bots. They're well on their path. And so does China need humanoid bots there? They've got their own humanoid bot industry, but they want Tesla there. In case, just like you said, in case if Tesla is the only one that ends up winning with really smart bots and really powerful bots, you want them to build bots there, as many bots as possible to help the economy there. And if they don't do it, it could be existential for China's manufacturing, because now you can have bots in every country and they can make products in their own countries. They don't need to use China anymore. That it's going to be existential for them. And so you've got that, and then you've got your own industry. So you want to, help them along. So they need Tesla there. They're not. It's too early at this point to kick Tesla out and then have their own bot industry and assume that their bot industry is going to be successful. And so you've got all of this coming in favor for Tesla to be the biggest winner for AI. Everything you just said, Brian, all true, but the one that you can almost you have a really good business case for is autonomy. And bots, we do this all the time. All of us have our own forecasts to show how businesses with bots can make really big money, versus the question is, if I have a LLM, how do I make money? That's the question. We don't know yet if it's a commodity and there's something to be made there, but there's no question about autonomy and how do you make money with bots. So I think the investment is only going to go bigger, higher, and it's going to become, every single month that goes by, Tesla's going to be even more important as it becomes realized that this is the only one of the top companies succeeding in the space. So
I've been very unimpressed with LLMs generally. I always ask it questions within my area of expertise to see how bad it goofs it. But Grok 3 is not goofing it in the ways I've seen in the past. And I get it, XAI is a separate company from Tesla, but it shares the ecosystem. It is likely we will see Grok in cars at some point. And I asked it questions that I knew had failed on Google, on their AI, and it was very, very impressive in terms of I asked it a trick question. I said, how many small toys should a world-class athlete eat on a daily basis? And it said, look, I get that you're probably trying to make a joke here, but just in case, here's the real answer. And also, maybe you meant tots, maybe you meant like tater tots, and here's an answer for that. And it was breathtakingly refreshing to see that. If anyone can monetize AI, Tesla's uniquely positioned to do that, putting it in cars, both as the driving system and as the human interface to the system, is worth money. A lot of these startups you see have no path, no plan to monetize. And it's, well, great, you made a really cool product. I don't know who it's for. So yeah, I think Tesla is uniquely positioned in that regard, and their ability to attract talent puts them in a different category from a lot of the other companies.
So, Brian, AI funding is going to keep going up, is what you're saying. But why is the economy the way it is today? So people were saying that AI is productive. It's making all the companies productive. It started showing up right last year. You start seeing many companies succeed. Then all of a sudden, now here we are at the downturn. What do you think happened?
Well, we have, Doge happening. So you're cutting, $300 billion or whatever per year out of the economy, and it could go to $1 trillion. So that would be a recessionary thing if you don't have offsetting um, um, tax cuts and stimulus checks and those kind of things, right? If you take out that much money, even if it's like bad money, need to be taken out, corruption, all that kind of stuff, it is a dampener on the economy. And um, so so that's a near-term effect. But so those macro moves, which they're doing a bunch of, and then also the I think it's going to be another 4 or 5 months of this tariff activity, the cuts and that kind of thing. Then they'll stabilize. They'll continue to be followed through on that, but that is a larger effect as the adjustment is made. Uh, the There's going to be March 14th, like 9 days from now. There needs to be a budget bill passed. Otherwise, I think you do go into that continuing resolution, budgetary crisis thing. So they need to pass that, and that will include, I think, more like the House bill. But then that's continuing cuts, another 4.5 trillion out. But then offsetting that would be the no tax on tips, the car interest rate thing would be $2,300. So there's a bunch of these things that are happening on the macro scale that are tough medicine that will have because a few 100,000 people are losing their jobs, and that doesn't even count, and the federal government doesn't even count contractors and that kind of thing. So we have to do this little dip down, like maybe take 2 quarters even of a recession before V-shaping up. You can look at World War I. After you demobilized, that there was a V down and then a move up. So it's just macroeconomics, economics 101 kind of thing about what's going on. There's like, even though there's AI, it's like the AI productivity stuff is happening, but it's like, what, $13 billion for Microsoft, $50 billion, $100 billion. It's like nothing relative to the trillion dollars, $100 trillion of the economy. It's like, it's not big enough to move and counteract the fact that, inflation's high or interest rates are at, 7% for mortgages. So that stuff matters more. It's gonna change it where it's just like .com, 1996 to 2000, 2001, right? Everything's happening, internet's happening 1996, and then the economy GDP starts growing at 5%. But there was a ramp up, from 5 years. Like where's the growth, where's the productivity? Even though you're growing exponentially, it takes time before it's like, okay, now you got $4 trillion of cloud or whatever it is. Yeah.
Okay, so let's assume what's going to happen this year. I'm just going to go back to Tesla again, right?
Yeah.
So we all agreed that if the economy's bad, the sentiment bad, stocks are all falling. Doesn't matter what kind of news Tesla does. Now, when do we prove that Tesla's? Do you guys both agree that Tesla's volume of sales of cars is going to rebound, and that it might actually be a growth year at the end of this year? And when would the investment public recognize that that's the case?
I don't think this year will be up on the whole. I think the drag from the first quarter is going to be so substantial that it's going to be tough to overcome. And I think we've got a lot of economic headwinds ahead of us. We've just got a very bad unemployment number, and it's unclear how many of our trading partners are going to be super jazzed about importing the cars. We've got a lot of hostility going around. We went all in on Team GFY, and now we're kind of having the find out part of that equation come back on us. So I'm not sure that this will be a growth year, but I think we're going to see pretty great numbers. The doom and gloom prediction on Model Y is completely premature and largely unfounded. You cannot pretend the car's not going to sell just because it hasn't sold when it isn't for sale. That's not a reasonable conclusion. But I think the thing that could change that and make this absolutely a growth year, a strong growth year, is if we do get the intermediate compact based on the 3er Y and it can be made in great volume. I think that could absolutely pull this entire thing out of the fire. But based on the models we have today, the 5 basic models, I'm thinking that those are not going to be substantially better than last year.
I got a question for you guys. Do you guys agree in general? People say that the core business of a company needs to be good, and then before the other businesses, like the growth story companies, like the autonomy and the boss, can actually add on to it. If you have falling car sales, it doesn't matter if autonomy is showing that it's working or not. It's not going to move the stock. I don't know if that's true based on the fact that autonomy is such a big deal, but generally that's what people believe.
If you looked at NVIDIA, they were before ChatGPT, the year before ChatGPT, they went from 300 down to 100, right? And basically it was because, hey, the gaming chips and the other stuff is not going good. Things are shrinking. And then you have the breakthrough with everyone wants AI chips and it rips. And I don't think gaming chips are doing that good, right? So, and then maybe whatever their non-AI, whatever chips. So if your new thing is big enough, then the fact that your old thing, like Amazon, e-commerce, whatever it's doing relative to cloud AWS. AWS is 8% of the profits. They had big revenue on the e-commerce side. It's like eventually if you flip to the new thing, then the old stuff does not matter. It's like if you're making 10 million Tesla bots, 50 million Tesla bots a year.
Yeah, I'm talking about this year though, right? So we're not going to be there quite yet. We're not there yet.
But the turnaround happened for NVIDIA in the year when that other stuff happened. For on the car point, another theory I'm going to toss out there, the 0% Model 3 incentive. I think they're clearing out Model 3 inventory because they worried about the Osborning or whatever when they introduced the new premium model. So thus I feel that that's an indication that 4 to 6, maybe 8 weeks that the new car comes out because of this move, indicating that they're preparing.
What new car?
The intermediate.
The intermediate car, the low price car.
So the more affordable cars, and so you want to get rid of the Model 3s?
That's what it looks like they're kind of doing.
Yeah.
So explain that again.
3s.
I don't understand why that.
So Model 3, the cheapest car they currently have, right? The base Model 3 at like $40,000, right? So if I come out with a $33,000 initial priced new car, right? Then this new car is going to take out sales from Model 3, right? It could affect some of the other cars too, but the most closest to it would be, if I had to choose, it'd be that thing. So I want to clear out that inventory so that when the new thing comes out, it's less impactful on my Model 3.
They're going to keep the rear-wheel drive, the low-cost Model 3. It's just that they don't want to be holding a lot of inventory.
Sure.
So this is for you a signal that maybe they're getting closer to make an announcement. Is that 5 weeks from now, you think?
Right. For my over and under, 4 to 6 weeks. So 6 weeks more likely. But if you announce something 2 weeks ahead of production, right, you start getting to the range of like, I would then tell you it's happening because 2 weeks before, right? Or I just announce it, 6 weeks or 8 weeks when I'm actually making the cars. The no
Very
announcement.
Interesting theory. Okay.
Yeah.
So I would say that I love that theory. In terms of what is your core business and how strong does it need to be, I would say Amazon's core business is not e-commerce, but books. That's what they did. And they still do books very well, but they are everything else in addition to that now, all the things for which they're known. Berkshire Hathaway's textile business is flat. It's been flat for 40 years. I think they're doing okay. I did want to say that in about a minute here, I'm going to cut out, take a quick break so that you can join me on the after show. I did think one question I have in the comments for everybody is how do we determine whether which Brian is the evil twin? Because we haven't reached a consensus on that yet. I'm sure it's
evil
one of
twins
us.
have mustaches and the goatee. So you're the
darn
evil
it.
twin. Facial hair.
In the
There's,
comments, is that verified? Is that valid? I think it is. It's hard
two
to
Wong,
refute.
two Wongs make a
That's
white.
hard to argue. That's hard to argue, man.
All right, so I'll see you guys in the after show if you have questions and comments, but please continue enjoying this. Remember to subscribe to Nick at Investing Against the Grain, to Brian Wang at Next Big Future, to Herbert at Brighter, and of course to me at Futurasa, and I'll see you guys in a little bit.
Bye, evil Brian.
Evil Brian, yep. The one leaving's evil. So that's very interesting theory, Brian. So you're saying that's why they just released a 0% down. It's more than just 0% down, isn't it? Like 0% down, 0% interest. They're really doing their best to get rid of or to boost up sales of the low-end Model 3s.
Right. Yeah. So it seems to be like a tea leaf thing that seems like a pretty big tell. That you know, like when they were going to start the new model, the refreshed Model Y, they cleared out old Model Y inventory as much as they could, right? So that's an indication that hey, I'm getting ready to do it.
Isn't it too soon though? I mean, the Model Y is just now being delivered to customers across the world, and in the U.S. just happened a few days ago. In Europe, is that enough time to?
Kind of.
I think it's enough time. Because, like I said, 12,400 for the China stuff, and Lars was talking good about Austin and
Wait,
and
what's the
Fremont.
number? 12,000. I heard 2,000 per week is what they were doing in new Model Ys. Are you saying now
2,000
that you
per
heard
day,
per
2,000
day?
per day,
Oh,
2,000 per
shit.
day. So they were doing 12,400 total Model 3 and Model
Okay.
Y. Right?
Okay.
So 2,000 per day is 14,000, right? So then if you had Model 3 there too, you'd be
They're
20,000.
pretty well at ramped at this point for Model Y in China, but not
In
the
China,
other,
they're pretty much around.
not the other factories yet. Okay.
Maybe they are, because Lars was kind of saying that he was sounding good about. He wasn't saying, hey, not like the Model 3 ramp in Austin or like that, which was slow. So I think they've learned their lesson. But again, we haven't, unlike China, we don't see that number, right? We don't see although Troy should be counting them, but no indication on that. But the fact that China's fully ramped, that and then if we're kind of doing okay in the U.S., right? Even if Europe was doing nothing, right? It would be good enough that they would say, okay, now we're transitioning over to the low volume car, because it will take time to ramp the low volume car. I'm only adding on, in the perfect situation, they would get, like to 200,000, 400,000 in a month, or, like, sorry, not that much, like 100,000 a month, right? So they'd be starting to do big stuff in China and in Austin. If I'm pretending to be, Jeff Lutz, right, that I'm using the supply chain partners to get up to speed on all the parts and things with Y and 3, and then they're making roughly the same parts on 70% of the vehicle for the new thing. So then my partners have to go to, in 6 months, 9 months, 12 months, get to double their parts or even triple their parts, because I'm doing more volume, right? Because I'm sharing parts between these vehicles, right? There are some differences of, like, whatever the 30% difference is, but the main guys have to ramp. So if I'm ramping new Model Y, and then I also now ramp Y and new vehicle, all the supply chain has got to move up like that. So then if I'm ramping here, I continue unbroken the ramp where each of my guys, is making, 100,000 engines or battery things or whatever other major component per month, and then now they got to go to 200,000, and they go like 100, 110, 120. So I'm getting 60, 80,000, 90,000, 100,000, and then ramping Model Y, and then I continue 110,000, 100,000, because I got like 100,000 Model Y plus 20,000 new vehicle plus 30,000 new vehicle, 40,000 new vehicle. So I'm doing this straight line up of Y and 3 blending into Y3 and new car, heading into Y3 new car and Cybercab next year. So it's like this big constant acceleration up at a constant speed for all aspects of the supply chain and business is how I see it. So that's introduction goes to, April, May, when, I can work it in to my overall production.
Yeah, April, May. Yeah, March, April, May. That's next couple months. I've heard the rumors May, but Nick, you're saying that that's too early. What's your thinking?
No, I was mocking you. I was making fun of you.
Me? Oh, not Brian. Okay.
You said it's not too early.
Oh, okay. So you don't think it's too early? Oh, interesting.
That's insanity. That's insanity.
I'm okay with May. I wasn't okay with him saying that. We would get. Well, I guess 4 weeks is March, April already. So
I don't see it happening. I could see them saying like an announcement just before earnings that they have something to show us. I mean, if they just did that, we'd be at 350, right? Like if they just said, "Hey, we got something to show you," like kind of do like an Apple tease. Old Apple, not this recent.
But everybody agrees, right? That they wouldn't just show it to you. They want to be ready to sell it because you don't want cannibalization.
I know, and I think that's what they would do. I think they would say, "We got something to show you," and they would show it, and they would say, "Put in your orders now. Deliveries
2 weeks.
Start in 2 weeks."
Yeah.
So 4
you're
weeks
thinking
announced the show.
there's
2
May.
weeks
mid-April.
Yeah.
You're saying April 20th?
I think they would make an announcement that they got something to talk about. Then they would have the earnings call, and they'd probably say like, "Yeah, we don't do product reveals in the earnings call."
Right.
And then maybe like right after the earnings call, like 3, 4, or 5 days after, they have a little event, and then they say, "Yeah, get ready." Because you also want to have that kind of, in my opinion, you want that noise to happen before robotaxis in Austin.
In June.
Like, I mean, I don't know how much they think about this, but ideally, you want to bucket these things. You don't necessarily want everything to happen all at once, and then it's like, all right, now what? And Elon probably also only has so much time to do everything.
Ooh, okay. This is pretty good. Last few minutes here, you guys dropped some bombs, some interesting theories.
Last thought. I'm more convinced than ever now that a lot of the cybercabs we've been seeing by Joe Tagmeyer are, I didn't think this before, but are camouflage this next vehicle. I'm so convinced about it now.
Yep.
Okay, well,
Steering
I don't
wheel,
agree
red brake
with
calipers,
you at all. So yeah,
elements of the unbox, same. I mean,
yeah.
Now it's obvious to me.
I
Brian,
agree.
you agree? Oh,
I agree.
cool.
Oh, so you guys
Then
are
I'm
both
right.
on the cybercab. Is going to be the cyber car, the low for more affordable vehicles.
Four seat
Yeah.
version. Yeah.
I think I'll have 4
4-seat
seats.
version.
I think I'll have 2 doors, but because there's so many elements, all they have to do is not put a glass roof, put the other roof on, and like, hey, it's a cybercab. You could do such little things. I can't.
And then-
Yeah, the question I've been having was why have we been seeing so many cybercabs being tested around Giga Texas? They keep just testing it several months ago. In fact, if you didn't, I think they're going to have a bunch of them in the June release, maybe 100, something like that. And then he said mass scale in 2026. So it felt still early. Like, why are you testing it so soon? But that could be a reason. But yeah, I'm not there.
So the other reason why is that it's a bridge to cybercab. So they want to make 2 million cybercabs next year, or or 4 million, whatever year after that. So then, if I want my supply chain to get used to doing something like that, like 1 million or 500,000 of a 4-seat version, right?
Yep.
Or have something where it's like I can make 2-seat, I can make 4-seat, and then I can shift production between the two, right?
Yeah.
I want something more cybercabby because that's my future. Right, so I need to bridge over 3 and Y over to cybercab, and this is the halfway thing in between it.
Okay, interesting. The other thing was I've been always complaining. I've been saying that, okay, if you were to design a robotaxi first design autonomous car, it wouldn't look like a normal car necessarily. I always thought it was going to be more like a London cab, and I've been saying this for a while. But why did they do this, the
London
cyber cab the way they did? It's probably because it's that middle ground between it's still really a car. Let's go ahead and sell that as it can be sold both as an individual car as well as a cyber cab. And then we have their robo-van that we'll make in different versions of that to be truly, optimized for the experience. But that could be why they made it this the way, you know what I mean? This does not look like if you were to design a cyber cab, it wouldn't have, I felt wasn't going to be like this, right? Yeah. So
Okay.
interesting. Oh boy. It's fun. We're going to find out soon. Okay, guys. Thank you for joining. Brian
Thank you.
Wang. Thank you, Nick.
Thanks. Thanks, Nick.
Cheers,
See everybody.
Thank you, Herbert.
Bye-bye.
Bye-bye.